Google stock just reported earnings, and unfortunately, the stock is down roughly 7.5%. Now, in today's episode, I actually want to take a closer look at their AI infrastructure investments and how it is bullish for companies like Nvidia and Broadcom. Too long don't watch. Google pretty much mentions that they still don't have enough capacity to meet the demand, so they're increasing their overall their capital expenditure to $75 billion for 2025, mainly driven by AI infrastructure solutions. So in today's episode, I want to share some of the thoughts that we hear from Google. And I just kind of want to share my overall thoughts on how this is driving some new levels for AI investments. So let's take a closer look in today's episode. But before we go any further, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, whatthechip.happened.com. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So Alphabet, unfortunately, after hours is down roughly 8%, sitting at $190. Now, that seems pretty insane, but I'm going to guess those were levels we saw. Yep, we saw those levels in early January. Now, the main reason the stock price is down is, unfortunately, they did miss on earnings. They're seeing a huge increase in AI investments, and they also did miss on cloud revenue. Cloud revenue was around $11.96 billion, where the Wall Street was expecting roughly $12.2 billion. Now, this is interesting, right? Because the company is saying, hey, look, we're investing in AI infrastructure because we don't have enough capacity to meet demand, but yet they're missing revenue as well. So there is some disconnect between Wall Street and Google and their financials right now, right? But for AI investments going into two main players, they're going to be Nvidia and Broadcom. Now, Broadcom is the one that's seeing most of the returns right now. After hours is up nearly 4%. It does seem like Broadcom investors are excited because Broadcom is the one that helps Google make their TPUs. So if you're seeing kind of a growth in AI infrastructure, you're going to guess they're going to make more TPUs, which in theory is going to be very bullish for Broadcom. Now, the other thing is both Nvidia and Broadcom are in different levels, right? Nvidia is making multi-billions of dollars per quarter. For Nvidia, an extra $5-10 billion to Nvidia, and I'm just kind of showcasing numbers to make the example, but an extra $5-10 billion to Nvidia is definitely great news. But an extra $5-10 billion to Broadcom is a lot better news just because you're starting from a smaller base. And I guess because you're starting from a smaller base, Broadcom investors are a little bit more excited about the overall growth rate that this company can see. Now, Nvidia is not up much. I'm gonna guess most investors are expecting, for some odd reason, that this is gonna go to ASIC solutions only, and I don't think that's necessarily the case. I think Google is gonna continue to spend a lot of money on Nvidia GPUs as well. Now that I kind of have my overall thoughts, I think Google is going to be looking pretty attractive. I actually am very bullish on Google. I think Google is going to be one of the best cloud infrastructure plays for the foreseeable future. So if we see even more dips on this, or if this dip doesn't get bought up, Google is definitely going to make it into my overall watch list of heavy additions. So Google is one that I'm really bullish on, and just waiting as a patient investor to buy more into. Few things that I found interesting is Google mentioned that today cloud customers consume more than 8 times the compute capacity for training and inference compared to 18 months ago, and will continue to invest in their cloud business to ensure they can address the increase in customer demand. I think that is wild, right? 8 times more than 18 months ago, and we're still in the early adoption phase of AI. So this alone is giving me this kind of bullish take that AI investments is going to continue at these levels. Now, Google also continues to see strong growth across their broad portfolio of AI-powered cloud solutions, and they do it with both GPUs and TPUs, like I mentioned earlier on. In quarter four, they did mention that they saw strong uptake of Trillium, which is their sixth generation TPU, which delivers 4 times better training performance and 3 times greater inference throughput compared to the previous generation. But they continue to see strong relationships with Nvidia. They recently developed their H200 based platform to customers, and just last week, they were the first to announce a customer running on the highly anticipated Blackwell platform. So they're adding Blackwell H200, and they're going to continue this strong relationship with Nvidia. Now, they mentioned that in cloud, given that revenues are correlated with the timing of deployment of new capacity, we could see variability in cloud revenue growth rates depending on when new capacity comes online during 2025. And this is very important, right? Maybe the reason Alphabet missed this quarter is because some of that capacity took a little bit longer to be built out. And it's not necessarily Google's fault, right? Google has to build data centers, the powering system, everything in between from maybe workforce and everything else. So variability happens here with growth rate. So even though they missed on cloud revenue, it could probably have done with the capacity. And if they had that capacity, they would have been able to grow faster. So they do expect to invest roughly $75 billion in capex in 2025. The expected total investment levels may fluctuate from quarter to quarter, primarily due to timing of deliveries and construction schedules. So again, this is why as an Nvidia investor, it's very important not to just look at quarterly capex. It's important to look more like trailing 12 months and guidance for the full year, because there might be a quarter where data centers took a little bit longer to build out, power maybe took a little bit longer to be put into onto systems, or something else, that it makes the following quarter to quarter capex is not the best ideal way to think of investments in the AI market. Now, I do believe the whole market looks at it that way. So fluctuations in capex because of timing could create buying opportunities because the market will be kind of dumb about it. And like they discussed, the 75 billion in capex is majority going to go towards technical infrastructure, which includes servers and data centers. So pretty much continue to be bullish on the AI market. And this is pretty strong because just a week or two ago, we were kind of getting that DeepSeek drama, right? That DeepSeek drama, that DeepSeek was going to end the AI market and it was going to end the AI infrastructure space. And here we can see from Google that that's not necessarily the case, that we're going to continue to see investments in the market. So they exited the year with more demand than they have available capacity. So again, more bullish scenarios. So they are tight supply demand situation, working very hard to build more capacity online. As mentioned, we've increased investments in capex in 2024, continued to increase in 2025, and will bring more capacity throughout the year. Now, Sundar did talk about DeepSeek, and the first thing he wants to mention is DeepSeek is a tremendous team, and they've done very, very well. And it's been obvious over time that frontier development is going to drive a lot of efficiencies, right? So we are hearing from a lot more players that DeepSeek as a company is very, very amazing. Their engineers are doing really great moves. Now, the pricing of it is a lot of question, but one thing that they mention is if you are looking at the trajectory over the past 3 years, the proportion of spend towards inference compared to training has been increasing, which is good because obviously inference to support businesses comes with good return on investments, right? So the ROI of inference is where the money of large language model comes, right? This is why Google and Microsoft sell kind of their API of OpenAI or Gemini, because that's where the strong ROI comes from them. So this, if they're getting strong investments and strong if they're getting strong return on investments by buying more infrastructure, then as long as they continue to see that demand, they're going to continue to buy AI infrastructure. So Alphabet, like I mentioned, I think the price drop missing on cloud revenue is a mistake because it most likely has to do with capacity and not them losing market share. If they had more capacity, they would have been able to grow at faster levels. The second thing is this company is doing really well with their infrastructure built out. They are going to continue to invest, but they have the power of TPUs and GPUs. I believe at the end of the day, both Nvidia and Broadcom are going to win strongly from this space. Now, the final thing I believe is the market is going to create buying opportunities, not just for companies like Google, but companies like Nvidia and the semiconductor space, as some fluctuality throughout the quarters might be seen as weakness, where in reality, it just really has to do with timing. So let me know, what are your thoughts on Google? Is this something that you got very excited for Nvidia? If not, let me know on the comments below. So take care, have a good day, and see you all next time.